I will do that right now.
Awesome. Well, Ginny, what are we doing today?
Did you notice I didn't say I have to go to the bathroom in the background
That's new.
while we're getting ready?
This might be short. Or we'll have an intermission.
Sorry, I get nervous. Okay.
Well, today I think we're doing buyers tips and tricks. We're going to discuss everything from the process of what you need to do before you start looking at houses, to what to look for at houses, to what to expect with the market. Really anything and everything that is buying a house. So,
Wait. Oh, there we go.
Really anything and everything. Cool. Hey, Sandra.
Oh, hey, Sandra.
Cool. All right, so again, buyers tips and tricks. We've had some pretty good experience with this in 2018. Again, we're live with Lincoln Select Real Estate Group in Nebraska Realty.
Yeah, we should probably say that.
We probably should. But Lincoln Select Real Estate Group at Nebraska Realty. In 2018, we helped 116 buyers find homes. So we have a little bit of experience with this, and of course, years beyond that, we've been helping people for a long time. So, yeah, like I said, we have 7 or 8 things here we're going to go through, some cheat sheets we made to maybe help you guys out understand how things work. I kind of wanted to start with understanding where the market is today. I know we talk to a lot of people, hundreds of people a month, and it often does come up where people are, saying that they may want to wait. They're thinking that the market's going to crash like it did, 10, 12 years ago now, and really, we just don't see that happening. Economists don't see that happening. Even when the crash should happen, 2006, 2008, somewhere in there?
Yeah, 2007-ish, yeah.
The change for properties in Nebraska was at 5%, which is one of the nation's lowest. Nationally, the change for home prices, they depreciated about 33%. And just for fun, Nevada, for them, they decreased 60%. So
that's crazy.
It is pretty crazy.
Wow. We got pretty lucky.
We did.
We're lucky to be in the Midwest.
Yeah, and really the entire middle of the country, North Dakota was down 2%, I think South Dakota 4%, Oklahoma 6%, Iowa 5%, Nebraska 5%. We're kind of just locked in here. We don't react near as quickly as the coast. But that being said, the coast has started slowing down. They've seen increases in inventory. And we're also starting to see that. We went over that yesterday. Inventory is up a good 15% over where we were last year, which is pretty awesome. That's good for you buyers, not so much for the sellers, but good for you buyers. And houses are also staying on the market about 25% longer this year over last year.
Well, it depends on price range too.
Yeah.
So the inventory in the 250-ish and under, I think we're still seeing low inventory and multiple offers. Anything above that, we've got more to choose from.
Yeah, well, even above that, I mean, a lot of stuff above that, Ginny, I think is new construction a lot of times.
Yeah.
And new construction starts are down between 20 and 40% right now, which is still, it's this weird little thing that we have going on where, inventory is increasing on pre-existing, but decreasing a ton on new construction. So I'm curious to see where that'll lead us here going into next spring. But
well, maybe it's a good time for builders to start building then.
That's what I'm
if
thinking.
other people are slowing down on it. So
what was it, June?
Yeah.
June 18 compared to June 19, 2019. New constructions, pending new construction was down like 40%.
Wow.
Yeah, that's crazy. So
that's a big change.
That is. Some more fun things I pulled up. I read some stuff up on this. The average home price in America since 2006, which was kind of when that crash really hit us hard, they're only up 1% overall, which is not a lot, especially over 12 years worth. But another thing that we've been seeing and I've been kind of watching is because of the stability of the Midwest, investors from the coasts, from Florida, California, Nevada, all those, they're investing more in properties and in commercial stuff in the Midwest because of the strength of our economy. So that's got to say something maybe for some of the buyers that are out there thinking they're going to wait and hold off. And then another huge thing that came out that benefits buyers was interest rates.
Oh, yeah. Interest rates dropped a lot this past week, as low as 3.5% on certain loans.
Yeah, 30-year loans.
Maybe even lower. So rates are amazing right now. Amazing. So I know we've seen increased activity even in the past week. I think that was a lot to do with it.
Yeah. Yeah, 3.5 is insane. I mean, that's basically free money.
Yeah.
And so, like, our parents, I mean, they were getting loans, 8, 10, 12, 14%. So to think 3% is pretty nuts. So
it's insane.
Really insane. So
Yeah.
we'll keep moving forward here. So I think we have notes here, of course. Really, the first thing we wanted to talk about is really figuring out and determining, where you want to be as far as a home. So what do you feel like you can afford? How much do you want to spend a month? Those types of things. And it's not always easy to determine that. There's tons of mortgage calculators out there, but how accurate are they really? So the first thing you need to do is really just decide, what type of house you want to, maybe that you'd be interested in. What type of home would motivate you to move? Because of course, if you're not going to buy a house or find a house that makes you more happy, then you're probably not going to move. The easiest way to do that is to connect with one of the agents here at Lincoln Select Real Estate Group, or a lender, either one of those, and they can really sit down with you and explain that stuff to you. We created a cheat sheet that some of our agents do use, and so we really just broke down, this is home prices and home values and what you should expect for a monthly payment. I don't know how well you guys can see that. Maybe later you can pause on this specific diagram, but $100,000 house, and what we did with this is a 3% down payment with 4.5% interest rate, and again, that's kind of where they were when we created this not very long ago. They were up above 4. But $100,000 house, your monthly payment's going to be around $878. $150,000 house, your monthly payment's going to be around $1165. A $200,000 house, your monthly payment's going to be around $1450. A $250,000 house, you're closer to $1750, and then a $300,000 house, you're just over $2,000 a month, and that includes your principal, your interest, your insurance, taxes. Of course, some insurance is estimated in that, but
And I mean, that's at 4.5%.
Yeah.
So I mean, just crazy to think how different we are at 3.5%.
way different. What do we have on this number for a $150,000 house at 3.5%? So you'd be spending $4,500 for down payment, but your monthly payment's going to be $1,050 a month at 3.5%. Just for a little understanding what that means, if interest rates pop up to 4.5%, it's back up closer to $1,132. So I mean, it goes up almost $100 a month just with that 1% interest rate, which isn't crazy. I mean, interest rates pop up, in a matter of a couple quarters, 6, 12 months,
Sure.
easily 1% or so. So
Sure. And we don't know what the rate's going to do, of course. Everything's unpredictable.
Yeah.
But we were supposed to be at 5.5% by the end of this year is kind of what they had been projecting. So you just never know.
Yeah, they were all about that last year. They were saying, hey,
Yeah.
we're at 4.5 right now, right about this time. And they were saying that expect another 1% increase this time next year. And it's decreased 1%. That's insane.
Yeah.
Really good for buyers.
Very good.
What do we got here?
All right.
Down payment.
Yes, so saving for down payment, there's lots of different types of loans out there. You can do conventional loan as low as 3% down, FHA as low as 3.5% down. We've got FA, NIFA, HUBA loans where you can just do $1,000 down. So there's so many different options out there. You don't need 20% down like you did years ago, and a lot of people don't realize that.
Yeah.
So lots of options out there for everyone.
Yeah, and 3%, we just talked about it, $150,000 is $4,500. So if you're serious about wanting to buy a house, you do want to have some money saved up for a down payment. But like Jenny said, there are first-time homebuyer programs out there for the state of Nebraska through a NIFA program. And if you're a first-time homebuyer, which they define as someone who has not owned a home in the last 3 years, so if it's been a while, you can still qualify for this. You can either get a reduced interest rate or even $1,000 out of pocket total,
Right.
which is awesome.
Right. Yeah.
Makes it extremely affordable.
Yep. Helps a lot of people get into houses that maybe didn't know that they had that option. So.
And then
Yeah.
if you're a veteran, I mean, sure, if you're a veteran, you're aware of this, but maybe you're not, or if you're a friend of a veteran, the VA has a loan program that is 0 down, which is super awesome, as well as those loans don't have mortgage insurance on it. that mortgage insurance, you know, for an average loan, you're talking probably between $50 and $125 a month, depending on the size of the house, and so that would decrease that as well. So some good options there. And then a common loan is that USDA loan.
Yeah. For most rural communities around Lincoln actually would qualify for that. Also 0% down loan. So that's a really awesome loan. I know sometimes they can get a little backed up getting those approved, but they get them through.
Yeah.
So another great option if you're thinking about Waverly or maybe another small town around Lincoln.
Yeah.
So I think most towns around Lincoln would qualify.
I think every town around Lincoln, outside of Lincoln,
Outside
would.
of Lincoln, yeah.
I think the rule for that is somewhere around 20,000 in population, and so, I mean, the next closest town you'd be looking at Gretna or maybe Fremont or something. So, Hickman, Eagle, Waverly, Denton, all those. Probably maybe Crete even would still qualify. So, cool.
All right, so saving for closing costs. So sometimes you can ask a seller to assist you in paying your closing costs. Where we're in more of a seller's market in certain price points, you might want to steer away from asking for closing cost assistance if you can. But there's a lot of things that make up closing costs. So inspections, lender fees, appraisals, credit report fees, title insurance, homeowners insurance, recording fees. They do escrow aside for some property taxes and insurance as well. So those would all be considered closing costs.
Yeah. And to separate the two, because I know a lot of buyers, when we're working with them, there is a difference between the down payments and the closing costs. So,
right.
Your down payment, we talked about just a fun number at $150,000 at 3%, it's going to be $4,500. You should expect on closing costs, get up there around $2,500 to $3,000, at that average price point we're sitting at. So that's an additional amount of money. Like that NIFA program, that helps cover that type of stuff. That can help cover your down payments and your closing costs. You talked about not recommending, and especially in these more active price points, not recommending asking for the seller to help pay closing costs. That's totally, appropriate. If you're asking for that, it just makes that seller potentially more weary of your offer. But they can. They can help with closing costs. They cannot help with the down payment, though. So, $4,500 plus another $3, you're at $7,500. They get help with maybe that $3,000, but you're still on the hook for the $4,500. And you can get gifts for that.
You can get gifts from family and whatnot. Either they can write a gift letter stating that they are gifting that money to you. So there is that option.
So I
forgot about the gifts.
Yeah, so if you have, parents that are out there maybe looking to help family, or help a kid get into a house, or a present for a wedding present or a graduation present, they can definitely help you with the purchase of your home. That's completely okay.
That's a nice wedding present.
Right? I think I got a vacuum. So, a couple other things, Jenny, that we may have missed is, part of those closing costs, you do have to pay, your first year of homeowners insurance. And that's usually like $1,000 to $1,500, somewhere in that range, I'd say. So that's another big expense in there. What does help, though, is that the closing costs do help. They are subsidized a little bit by the sellers having to pay the taxes that they haven't paid yet. And so most buyers will get a decent credit back, a few $100s to maybe a few $1,000s worth of credit that they can put toward their buyers' closing costs and prepaids and escrows. So it's pretty cool.
Absolutely. So of course, part of the process of getting ready to buy a home is meeting with an agent, a Lincoln Select agent, to learn all about the process. We've got a really, really handy, thorough buyer guide that we go through with our buyers. So we have them come to the office, sit down with them, explain how the process works, because there is so much that goes into it. So meeting with your agent is definitely a key part in deciding if, when, how that you want to buy.
Yeah, and that orientation, we basically try to require that of our home buyers. It really makes the process go a ton smoother. And during that, we go over what the purchase agreement looks like and says. So when you do find that house, it's not the first time that you've seen that document. We also go over what the expense looks like. So we play with, different price ranges. We go find a couple houses online and we run a net sheet but we'll show you, what your estimated payment would be, how much out of pocket you should expect. That way that the buyer understands exactly financially what it's going to entail to buy a $150,000 house, $180,000 house, $220,000. We cover things like inspections at that. I mean, there's 100 different inspections you can have out there. So we cover kind of what the most common ones are that we see, and how those could benefit you through the process.
Just the basic purchase agreement also. There's so much to it. As we know, there's 7 pages of fun in there. So we kind of go over that with them too, so they know what to expect. Because sometimes the offer writing process can move so fast, especially if you're competing and trying to get your offer in. So we like to go over that with them ahead of time as well.
Yeah, that's extremely beneficial for them.
Yeah.
Again, it gets rid of the worry of like, oh gosh, I need to sign this now, but like I'm concerned, I don't know what it says. So like I said, we go over all of that. And then really everything the rest of the way. So like we talk to them about how to get maybe qualified, what the process will look like for negotiating, and the inspection process, the repairs process, the appraisal process, utilities, closing, all of that we go over. So really there's no surprise for them. We go over all of that, and it makes it really easy. And we've seen our clients be super appreciative of having the opportunity to sit down with our agents for 45 minutes to an hour. And they get to ask questions, and we feel like they learn a lot, and our clients' experience increases a ton with how they're enjoying themselves. So next thing I think we have on here is to get pre-approved. So before you look at any houses, a home buyer should be pre-approved at a minimum. And that pre-approval from the bank, what that does is it tells a homeowner that the bank has looked into it and they believe that you have the ability to purchase a home. And so they write a letter basically stating, Mr. or Mrs. Buyer has the ability to purchase a home at said price point. But one thing I wanted to cover on here, we're all familiar, we've all heard the language, pre-qualification or getting a pre-qualification letter is going the next step. And so if you're a home buyer, a pre-qualification letter is great, but really it doesn't mean a lot. I mean, it means they ran your credit and then you told them how much money you make and if you have money in savings. Whereas the next level above that is really getting more of a full loan approval that's contingent on the appraisal. And so with that, the bank's going to do all of the work that they would do typically after you find a house. So they're going to ask for paycheck stubs,
bank statements.
Tax returns.
2 years tax returns.
Everything.
Those are kind of the main things.
And so once they have that, they can put together an approval letter, which makes your offer as close to cash as possible, because you're really removing all of those uncertainties that could pop up during the process that typically happens after you find a house. Also, if you have that approval, since the bank isn't having to do all of that, a lot of times you can close as soon as the appraisal's back, and so you can close probably as soon as 10 days. So we recommend that for anyone that's looking to buy a house, especially if you're looking like under that 2 or 250 range, to get full loan approval pending that appraisal. It makes your offer probably 10 times stronger, because it literally almost removes the financing contingency there, because the bank has already said you're good to go. So super awesome there.
Yeah, absolutely. That's the way to go, to give your offer the most weight.
Unless you have cash.
Unless you have cash, yes. So once you know your pre-approval amount or your purchasing power, then we get to start the fun stuff, looking for the house. So we would get together, kind of look for characteristics you're looking for in a home, area, price range, of course, style of home, things like that. So once we start looking and getting out there and just kind of seeing everything that's available, you want to keep an eye on some of the big ticket items. There's things that are cosmetic that I feel like can be overlooked, maybe some painting, some flooring, things like that. But the big ticket items are very, very, very important to concentrate on, because a lot of those big ticket items, if they go bad in the first year, that could amount to thousands of dollars. So you've got, your roof, your furnace, your air conditioner, water heater, windows. Of course, you want to check on the foundation. So those are kind of like the main things. And radon too. Radon's kind of a big ticket item as well.
Yeah, getting one of those systems installed.
Yeah.
Other things you want to be aware of and look for. And again, when you do find a house, you have 12 days to evaluate all of these items, and so you don't need to evaluate all of them before you make an offer on the house. You are allotted those 12 calendar days. But during those 12 days, aside from inspecting and making sure that those items are good, you may also want to look at the HOA and the covenants and make sure that that the covenants are going to allow you to do what you want to do with your property. You're going to want to review a seller property condition disclosure, which is a document that the seller is required to provide that states, as far as they're aware, the condition of most things in the house, everything from electrical to plumbing to structural issues to water to radon to termites, all that stuff. And then you want, if you have a government guaranteed loan, like an FHA loan or a VA loan or USDA loan, those loans specifically have requirements for the house as far as, it can't have chipping paint, it can't have rot, broken windows are a pretty common thing. So talk to your agent about that. Your agent, especially with Lincoln Select Real Estate Group, your agent will know exactly how to handle that situation and know exactly what to look for when looking for that. And kind of along with looking for houses, thinking long term.
Right. I mean, you have to keep in mind, when are your kids going to be in school? Where would you like them to go to school? Are they in daycare? How far do you need to drive to daycare, to school, to your job? So I know a lot of my clients keep that in mind too, like the commute between daycare, school, home, work, all of that. So location is definitely huge, along with your family's needs and what they need now and what you can project they might need in the future as well. There's certain school districts that people want to be in. So there's a lot of factors that go into it. Buying the house that might not be just the house itself, but kind of like outside external factors.
Yeah.
So
lifestyle is a big part of that too. So making sure that where you're at with your lifestyle, and also seeing the future, understanding if you guys start planning to have kids and buying the correct house for you to grow in. Because buying a house is fun, but it does cost. Like I said, there are those closing costs you never get back. Your down payment you'll get back when you sell the house because that's money that's going directly into your house. But $3,000-$4,000 maybe in closing costs, you don't get that back. So keep that in mind. Make sure when you're looking and thinking of your future, whether it's job security or maybe you're thinking about moving to a different job sometime in the future. But overall, we're pretty blessed in Lincoln. The Lincoln commute overall is pretty short. Most of us don't have 45, an hour, 2-hour commutes into work like some cities do around the country. So
that's true.
Pretty
Although
cool.
It does take half an hour sometimes to get from one side to the other.
Yes.
But we are blessed, yes, compared to other cities. So once you find the house that you want to put an offer on, then that's the next step of the process. So there's a lot of multiple offer situations happening right now, of course, especially in certain price ranges. So you want to make your offer as clean and strong as possible, especially in that multiple offer situation. There's different ways that you can do that. Avoid contingencies if you can. Getting through the loan approval process, like you mentioned, is a super strong offer right there. Closing date. So sometimes sellers want to close sooner, especially if the house is vacant or if they have another house they're getting ready to move into. So you can offer a sooner closing date, or at least ask the other agent what the ideal closing date would be for their sellers. So that's a good thing you can do. Inspection options. So another thing you could think about doing is either foregoing inspections or just getting inspections for your knowledge only. So that could be a way to make your offer stronger as well.
Definitely.
Yeah.
That's, and we've been using that more. I'm not, it's a big investment, and so having a home inspection is pretty important to me, and I'm never going to not recommend that to a client.
Right.
But maybe strengthen the offer by saying, we're going to have inspections, but we're not going to ask for repairs. But at the same time, that gives you the ability, if something does come up that you're not okay with, that you can, step away from that transaction and move on to the next property. without
Right.
losing out on anything. So
Yeah, because you've got that 12-day inspection period.
Yep.
So that's a nice thing for buyers to have.
yeah, and then I mean, like maybe the final thing is putting in an aggressive yet realistic offer. I can tell you there are homes that have been selling for more than I'd be comfortable advising my clients to purchase, and we've lost out on those. But at the same time, there needs to be an understanding what the market looks like, and you're not going to know that, but your agent will. Your agents, especially with Lincoln Select Real Estate Group, our agents, we're writing several offers a week. Each agent is, so they understand exactly what the market looks like, and so they're going to be able to tell you what to expect. And what we find a lot of times is, a buyer will lose out in the first couple because, they're not quite as aggressive as they need to be. But then they realize they missed out on, their first dream home, and the next one comes along and they end up, going where they need to go to get that house.
Right. And of course we pull comps too before we write the offer, just to make sure that we are not overpaying because the house, of course, will have to appraise out if you're using a loan. So we try to advise them as best as possible within reason, of course.
Yeah.
But yeah, we do pull comps and make sure that
Because
we're within reason.
Honestly, 3, 5, 7, 10 years from now, I don't want to show up at the house and tell them that, hey, your house, you're not going to make any money on it because we overpaid for it.
Right.
That's definitely something we don't want to see. And I don't believe for the most part that's occurring. On occasion, I think it might be, but I think as a whole, again, home prices nationally are only up 1% in the last 12 or 13 years since 2006. So really, they've just gotten back to where they were in 2006. And as everything just naturally appreciates, I would say that's a pretty healthy spot that we're in. So,
Right. I agree.
and then after we make our offer, we go through all the inspections, all that stuff that we'll talk about when we have our orientation with you. But finally, there's closing.
Mm-hmm. Yeah, so closing day, you'll need a cashier's check for the amount that you need to bring to closing. And the cashier's check will need to be made out to the title company, and your lender will have that amount for you. So the cashier's check, you'll do a final walkthrough of the home a day or two before closing. That's to check for repairs. We test all the appliances, run the dishwasher, make sure garage door openers work, just kind of make sure the house is as it should be. And then utilities, of course, you get utilities switched over into your name to start on the day of closing. But, I mean, obviously closing day is the best day because you get the keys to the house and it's yours. So that's pretty much the gist of the home buying process. There is a lot to it, and our agents are always here to answer questions, to help educate you. Any of your real estate needs at all, we're here for you.
Yeah, and if you guys have any questions, go ahead and put those on there. I
Yeah.
think we're going to end with this little 10 commandments of buying a home. And so 10 things not to do, basically, when you're wanting to buy a house with financing specifically. And we'll just go through these. We'll take turns. But the first thing is don't quit your job. Don't change jobs. Don't become self-employed. Just hold on to your job until after you close on the house.
And then you can do whatever you want.
Do whatever you want. But while you're trying to buy a house, your job is the probably most important thing you can have. And if there's any sign that that income may change or just render gone altogether, that's going to be an issue for you. So what's the second thing there?
Do not buy a car, truck, or van, or you may be living in it. Seriously, any big purchases at all could affect your ability to be able to close or follow through with a loan.
Yep.
Everything is affected. So don't go buy a car until after closing. Once again, whatever you want to do after closing, go for it.
Yeah, and that includes, maybe things for your house. So don't go on a shopping spree and buy, a whole new house full of furniture or appliances, washer and dryer. Wait until after closing for that.
Yeah, that's number 7.
Oh, I skipped ahead. Yep, so don't do that. Sorry, guys.
Let's kind of go together.
Yeah, they do. Well, I stole number 7, so I'll give number 3 back to you, Jenny.
Don't use your credit cards excessively. Of course, don't let your current accounts fall behind. And then don't open any new credit cards to save money. A lot of those furniture places, if you order or open their credit card, you save 5% when you purchase your furniture. So just don't do anything with credit cards except for your normal payments like you should be. If you wanted to make any big purchases, definitely check with your lender first, such as furniture.
Yep. And the reason for that is there's debt to income ratios that come into play when you're trying to buy a house and get a loan. And so if you start putting more things on credit cards, that could potentially increase your debt to income ratio, which could potentially put at risk you getting that financing, or maybe the interest rate that you were hoping for. So be smart there for sure.
Next one's you.
Well, that kind of bounces off.
Yeah.
I think you stole that one as well. So
Yeah.
the next one was don't open any new credit cards. So number 5, don't spend your down payment. So yeah, don't take your $4,500 for your 3% down and take that to the casino hoping to double down on it.
I was gonna say don't go on a tropical vacation.
Or that. Don't spend your savings. You're gonna want that. Plus, you're gonna want to have a little bit saved up, for unforeseen expenses that could potentially come up. So that's that. What do we got next here? 6.
6, yeah. So when you're filling out your application, don't omit any debts or liabilities that you have. Just be completely honest, because you'd rather know up front what your purchasing power is than get into a transaction and then be disappointed because you shouldn't be buying the house that you have a contract on. So just be upfront, completely honest, and don't omit any debts when you're applying.
They're gonna find it, guys.
Yeah.
They are. It takes 25 to 45 days for a bank to close, and the reason for that is they're going through everything with a fine-tooth comb, making sure that there's nothing crazy out there that you have as far as liabilities. So definitely. We already covered 7 about furniture, appliances. Number 8, don't make any large cash deposits that are unexplainable. Just don't. There's lots of weird questions that come up when you just start depositing large sums of money into your account.
Because they want explanations. Where did the money come from?
Yep.
What's it for? Why is it there? So,
So
I would just wait till after closing.
So if you've got money in a coffee can, sitting in your
mattress.
freezer, or if it's buried in your mattress or in a pillow because you like the smell of money, if you're planning on buying a house, take that to the bank today, deposit it. It's insured, I think, up to $250,000, so nothing's going to happen to it. And from there, you guys should be pretty good set. So, where are we at next?
Do not change bank accounts. So, just keep everything as it is. Don't change banks. Just stay where you're at, and then smooth sailing as far as that goes.
Yeah. And then the final thing here, and we'll let you guys go, is do not co-sign for anyone. So don't co-sign on a car, don't co-sign on a house, any large purchases. Really, that falls back to that debt-to-income ratio. And if you're co-signing for someone, you are taking on their debt, which is a risk. And banks don't like risk, really. So keep that in mind for sure. So, guys, that's Live with Lincoln Select. Some buyer tips there. If you guys have any questions, want more information, reach out to us on our Facebook page, call us, email us. We're there, lincolnselect.com. You can find contact information there. But if you're thinking about buying a house, Ginny, myself, anyone on our team would be honored to assist you with that. You got anything for us?
No, I think we covered it. Did we get any questions?
Oh, let me look. I don't think so. We had some people watching. Brett said, great info. Yeah, I don't think so. So,
Okay.
you guys take care. We're here every other Thursday at 10 o'clock, live with Lincoln Select, with Ginny and or Matt, with Lincoln Select Real Estate Group, Nebraska Realty.
Next time we have Kayla, which with HWA.
Home Warranties of America.
So in 2 weeks, Kayla will be here, and she's always fun.
Yeah.
Super fun. So.
And home warranties, if you're not familiar with those, you guys will learn all you need to know in 2 weeks, 10 a.m. I'm going to try to figure out how to turn this thing off now. Thanks, guys.